All right, YouTube, welcome back to another video. This is going to be an investment update. Just talking about my mindset, talking about what I'm invested in, and my game plans for the future, and if I added any new stocks to the portfolio. So let's get into it. So I started this portfolio on September the 5th of this year. I invest twice a month, so every 8th and 23rd of every month. And today is November the 8th, so I did invest another $100 manually into my brokerage, which is called M1 Finance. If you're interested in looking at something like this, link in the description. So total amount invested on this portfolio is $500. Current net worth of the portfolio is $505.52. Ooh, there we go. So let's go to our investment pot here. Let it load here. If it will load. All right, so we're currently green on the portfolio from starting this investment journey, you can call it. Like I said, I started on September the 5th with $100 and just been doing $100 ever since. All right, so we're up currently right now 2.39%, which translates to $5.80 that we're currently up. And we do have $100 in buying power. I didn't invest it this morning. I wanted to wait till the market closed before I invested it. So tomorrow morning, all the investments will go in. Whatever you hear me say in this video is probably what I will do. Right. Overall, we've earned 43 cents in dividends in these categories and the amount we've earned. So the ETFs, we made 13 cents, industrial 10, finance 10, consumer 9, tech 1. All right. And those are pennies. So pretty much, let's go down here and let's just get it started, right? We're going to start our dividend ETFs. Right now, we're currently up 2 out of the 3 holdings. SEHD is the one down by 3.04%. I don't think that's bad at all. Just another opportunity to dollar cost average, which I will be doing my next investment into this stock. So my average buying price is $70.90. Current price is $69.57. I don't know. I don't think I'll be reinvesting much into SEHD since it's not really a big, I won't say big difference, but it's only a what is it, 3.04 difference. Overall, but I am going to reinvest into it. It is the only one down right now in my ETFs. My SPY and VOO, I'm just going to hold off on them right now. They're both up let's just say 2.5%, rounded off. And overall, happy with those holdings. I know they're overlapping. I know the only difference between the two is the expense ratio or tax ratio, whatever it's called. I know that I don't know which one to sell, so I have no problem holding both. That's just me. If you see it another way, advise me in the comments. I don't mind. Give me the criticism, right? And if it's something that I agree with, I'll look into it, take action on it if I want to, right? So pretty much starting that we call slice of the portfolio, which is the dividend ETF slice of the portfolio. We're up 0.6%, which translates to 33%. If we go to the earned dividends, we earn 6 cents in SCHD, 4 cents in VOO, and 2 cents in SPY for SPY. All right. If we go to the 1 day, we're down 2 cents, 0.02%. Over the last week, we're up 2.91%, which translates to $2.61. In the last month, we're up 1.78%, which translates to $1.37. And pretty much starting this portfolio or this slice of the portfolio, we're up 0.6%, 33% or 33 cents. That translates to. So moving on from there, let's go to our industrial stocks. So Lockheed Martin, Waste Management, holding those right now. Clearly, Waste Management is up 14%. I don't want to reinvest into that at such a high percentage because that will knock my dollar cost averaging out the window, say it like that, right? So my average price on this stock is $157.36, and current price right now is $170. So I'm gonna hold off on it reinvesting into Waste Management, let it come down maybe another 4 or 5%, and then next reinvestment period I will reinvest into it. But other than that, not mad at that. Those 2 holdings at all. Same thing with Lockheed Martin. We're currently up on that slice of the portfolio, pretty much 4% on it, which is 76 cents. My investment, our average share price is $434.45, and the current price is $444.66. So I'm gonna hold off on investing back into Lockheed Martin. Currently a hold for me. But moving on from there. So my biggest or lowest percentage right now is Caterpillar. I think that's just a mistake on my part. I did some research on it. I don't see a reason why they're down 20%, 19% right now. For me, that's $2.62. So my plan right now with Caterpillar, I still think the company is very strong, very predictable in my eyes, and my average price per share is $267.49, which is the price of the. Woo, sorry, tongue twister. The current price of Caterpillar is $234.82. So I may double my investment on Caterpillar. Sorry, Caterpillar. So put in another $20, just to get that dollar cost average down. That's the whole game plan of this portfolio: dollar cost averaging, making money off of dividends, and attacking the market, really, right? I don't want to overdo it, adding 20, 30 more stocks to the portfolio that I don't need. As long as I got strong growth stocks, we'll grow pretty much from here on out, right? This is a long-term thing for me. I'm looking in the next 10, 15, 20 years from my investment now. Yes, I'm only starting with $100, but sooner or later it will grow to $500, $600, $700, $2,000, $3,000 a month, right? I have to grow my active income. Sooner or later I'll be living off of dividends in the next 30, 40 years, of course. If you didn't know, I'm currently 19 years old. I started this portfolio at 18. Just learning from all the older people that I hang around, hearing their struggles, hearing their problems, and I feel investing in the stock market will evade me from those issues, right? So moving on, 3M, another holding of mine. I did reallocate it from, I think I had 10% of my investment going into this stock, which I reallocated it down to 5% when that lawsuit and everything happened, and it was down to like $80, $70, right? And I just been dollar cost averaging since then. So my current share price is $95. Current price of the stock is $92. So I will be reinvesting some into 3M. But other than that, just down 5% on this stock currently. Not upset at all. It's going to be a long-term hold for me. Overall, I think the company will survive the few lawsuits that they do have in the next 10, 15 years. I think the only reason I'll sell from this stock if they gain too many lawsuits for their free cash flow, so they can't pay me that dividend. And I don't want to be involved in a dividend cut in this stock particularly. All right. So if we go to earn dividends, we earned 2 cents from Waste Management, 8 cents from Caterpillar. But overall, that's what we earned in dividends. But I want to touch on the allocation part. So right now, the highest allocation is going to Lockheed Martin. I may switch that between Waste Management and Lockheed Martin and probably put some of Lockheed Martin's 38% back into 3M. Of course, I'm going to readjust it. I don't know how right now, but I do want Waste Management to be the biggest allocation in this slice of the pie. I think Waste Management will be more of a, what would you call it, anchor to this slice of the portfolio. But other than that, I'm still happy with what I got now. Just a few minor changes that I'll do to this slice, but overall, I'm happy with what I got. And let's go on to the next one. So that was industrials. We're going to go on to our consumer. So in the consumer pie, we only have 2 holdings in here: Costco, Home Depot. Costco has not went red for me, but a few times of holding this stock. I think I did buy it at a very reasonable price. I am currently up 5% on this stock right now, so I will be holding off on investing anymore just to keep that dollar cost average number what it's at now, which is $551.22, and the current price of the stock is $567.38. But overall, we're up 5% on this one stock. We gained 9 cents in dividends from this one stock. Very happy with the Costco holding. And sorry about my chair squeaking so loud. But yeah, that's what I was saying. Home Depot, I'm really just dollar cost averaging on this one. I know I bought kind of high first starting out, but since it's been going down, just dollar cost averaging, trying to gain those dividends from this one company. And I think it's a very strong stock. I don't think it's going anywhere unless they do something absolutely detrimental to the company. If it goes down 10, 20, 30%, I'm still going to be holding. I'm still going to be dollar cost averaging and just gaining the growth from this stock that everybody doesn't see, but I see, right? But one quick thing I do want to touch on, and one thing we are 2.5% down on that one stock, right? Overall, on this slice of the portfolio, we're up 1.97%, which translates to $1.01, right? But one thing I did want to touch on really quickly while I wrap that up, all these stocks that you see that I hold right now, I don't have any emotional attachment to. If I have to sell, I will. As you can see, I did invest in QQQ. Risk tolerance has reevaluated itself on investing in that one ETF. I didn't want an ETF in my portfolio that was mainly tech. I feel tech is a little bit too risky for me right now, as I have some tech right now. But I let me just continue. So QQQ, I think it's like 48% of it was straight tech, and I don't think I'm comfortable investing in an ETF like that right now. Currently, maybe in the next 2-3 years, where I'm investing larger amounts per month. But overall, I did sell it. I don't have any emotional attachment to any of these companies. If they do something that I don't like, that sell button will be there for the next morning, right? But overall, I'm happy with the holdings I have currently. I don't feel like settling any of them. Dollar cost averaging, gaining the growth, gaining the dividends is the whole game plan, right? Now, if we go to our finance slice right here, only one down right now is MasterCard. I don't think I bought MasterCard at too high of an evaluation. I probably could have waited a little bit longer and got better, but I wanted to get my feet in the water of investing. I just started it out on September the 5th. I do still think I did kind of high, kind of bought in kind of high, but not to the point where it's like, why did I buy that damn high, right? So my current hold average share price is $3.97. The current price is $3.89. And I'm only down 3% on this stock. So I will be reinvesting money into MasterCard, since it is the lowest, what's it called? Well, not the anchor. The what's the word for it? It's the lowest stock in the lowest percentage down in this slice of the portfolio. That's what I was looking for. But overall, everything is up on the green, at least 2%. S&P Global 8%. I was about to say X&P. American Express 2%. J.P. Morgan Chase practically 1.5%, right? Those three are going to be holds for me. I'm not going to reinvest any into those stocks right now. I'm mainly going to go into MasterCard. Other than that, I feel happy with all the allocations right now. I think the only thing I'll change, probably not guaranteed, I may take 5% out of American Express and maybe put it into the S&P Global or MasterCard. JP Morgan may stay at 20%. I may take out 5% out of it as well for allocation reasons. Just risk management. Putting more into some more confident holdings in this slice, of course, and yeah, that's pretty much my game plan on it. So if we go to our dividend here really quickly, we have gained 5 cents in JP Morgan Chase in dividends, 3 cents from American Express, and 2 cents from MasterCard, total of 10 cents. All right, this is just proof of concept in dividend investing and investing in growth stocks. I don't think I'm ever going to invest in any stocks that don't pay dividends. If I do, I have a damn good reason for it, right? But at the moment, I'm sticking to my plan, investing in growth stocks, investing in dividend stocks, investing for the long term, not the short term. Not looking to flip any capital gains wise. I'm looking to gain the passive income from each and every stock and their dividends, right? Free money in my eyes. All right, so now we go down to our tech here. So I only have 3 holdings in tech, and they're all in the green. So just touch on Microsoft right now. Microsoft is up 17.15%. So run it up to 17.5 if you want. My average price on this is $3.28.37, which trend at their current prices right now is $3.63.20. I don't think I'll be buying in at this price. I think that's kind of a higher evaluation right now, and I don't want to mess up my dollar cost average by buying at such a high price compared to what I have now. So this one's going to be a hold for me right now. Same thing with Apple. Intuit, I'm thinking about investing more. It's only up 1.1%, which wouldn't be too huge of a difference. My current average price right now is $519.74. Current price is $522.38. All right, and we're currently only up 1.1%. So I may invest some more into Intuit just to get a larger holding, but overall, this is probably the only 3 tech stocks that I may add or may hold for a long period of time. I don't see myself adding any more unless something catches my eye or if I'm interested in something. But overall, I'm happy with what I got. So this slice of the portfolio is currently up 8.94% from starting the slice, and currently $3.43 in gains. And the only dividend we got was 1 cent from Intuit. Proof of concept. That's all that shows me. I'm not upset at the dollar amount. I'm just starting out. I'm only 2 months in, and I'm in the green. Right? Rather be in the red. I'm gonna keep saying this word all the time. Dollar cost average is the plan, is the go-to, and getting those free dividends. Right? Now, the only one stock that I did add to this portfolio is the real estate stock, our category, and the stock or the REIT that I did add to this portfolio is Vici. I'm very confident in Vici. It was between this one and what's called Reality or Realty Corp, something like that. I don't forgot what it's called, but it's ticker symbol O, right? That one I was thinking about adding to this portfolio. I felt that Vici was a better fit for me and at a better price for me currently. I may add ticker symbol O. I keep forgetting how to pronounce it, but Realty Income, however you say it. I was thinking about adding it to this slice, but maybe in the future, just not right now. Most of my holding will be in Vici, but overall, I think this company is very strong. Las Vegas real estate, not F1, yeah, the F1 races are supposed to be there this year, so I want to see how that goes. A lot of people are looking at it very negatively, saying that it will affect Vici stock because it messes with some of the what would you call it? It messes with some of the not agricultural, but the sightseeing, if you want to call it that, right? I don't know the name of any of the buildings there. I just know it's a lot of gambling, a lot of lights, a lot of water in the air, and just a very beautiful place I've never been to before, but I want to visit soon, right? Yeah, so pretty much Las Vegas Strip is having that F1 race. Everybody's looking at it very negatively. I'm looking at it very positively. If you want to sell your Vici, sell it to me at a cheap price, and I'll do it. I'll buy it from you, right? I think that is only like a 1 month, maybe 2 month type of reconsolidation, we can call it, price reconsolidation, because people are going to sell out because they're trying to hide the race from anybody standing on higher buildings or in their rooms, right? Trying to watch the race, and it's not going to be possible because you can't really see it because they're doing some reflective light stuff or something. I don't really know, but I just think, let me not say I don't really know. I know exactly what's going on, but I just can't explain it right now. Just do your research on it. I just feel like that just be a better buying opportunity for me. If they're going to keep doing it every year, hey, keep selling every October. I'm going to keep buying every October. All right, so that's the only real estate stock that I added. The only stock that I added to my portfolio. Hey Alexa, turn off. Okay, sorry, she was about to yell at me. I didn't want that in the background. You see the greatest editor out there. But yeah, so pretty much overall, that's all my holdings right now. I do want to compare my portfolio to the S&P 500. So on the 1 day, the portfolio is up 0.07%. S&P 500 is up 0.1%. It beat me by 0.3 or 0.03. Not upset at all. So in the last week, the S&P 500 or my portfolio is up 3.25%, which translates to $12, and the S&P 500 is up 2.68. Right, I beat it right in the last week. In the last month, my portfolio is up 3.23%. The S&P 500 in the last month is up 1.09%. Beat it, right? And quarter really doesn't matter. I'm gonna just do all from year to date starting this portfolio. So I started my portfolio on September the 5th. That translates to a 2.39% that we're up on this portfolio, which is $5.80. And if we go to the S&P 500, let's just do year to date. Find September the 5th really quickly. That's the 6th. There goes the 5th. So from the 5th to now, the S&P 500 is down 2.54%, and I pretty much did that, but in the green, right? Very happy with this performance. Very glad in my investment performance. Like I said, I'd rather dollar cost average since I started so soon, but other than that, I'm learning how to invest. I'm learning the ropes. I'm using the S&P 500 as a great as a gauge to where my portfolio should be compared to the market. And right now I'm outperforming, and I'm proud of myself. Proud that my portfolio, my stocks are doing good as well. But other than that, I do want to touch on one thing really quickly. So I post YouTube Shorts daily, just talking about the portfolio performance for the day, or technically the previous day. So this guy pretty much said in the comment, he said, let's just read it out. He said, "You're losing money doing this. If you had just shoved this into the S&P 500, you'll been up 10% year to date. Set and forget. Manage money actively like this will not earn you more. Statistically, a lot less." And my response to him, I said, I totally agree, but that's if I started this portfolio January. But I didn't. I invested on September the 5th of this year. For the, what I say, from the time I replied to your comment, the S&P 500 from September the 5th till now, which was November the 1st, is down 5.76%, and my portfolio currently is up 3.05%, which means I'm beating the S&P 500 by 2.7% year to date of starting my portfolio, which was on September the 5th, right? I like these criticism. I like the criticism from you guys. Please, if you see something that you just totally don't agree with, leave the comment, right? Don't be disrespectful with it, of course. Just leave the comment, and we may can have a conversation about it. I can show you where my head is, and I wouldn't say prove to you I'm right, but I can show you another way to look at it. Let's say it like that. We can just jump what's called mindset to mindset, knowledge from knowledge, right? But yeah, if you got any advice, any criticism about my portfolio and what I should change, what I should do, any questions about it, put in a comment. Other than that, I'm happy with the performance. Like I said, dollar cost averaging is the game plan. Investing in growth stocks is the game plan. And pretty much, if I do add any other stocks, you guys will be updated. I don't have no Patreon or anything like that. I don't think I'll ever make one, really. I don't know. But yeah. Make sure y'all like, comment, subscribe. I think that's gonna be it for this video. I hope y'all enjoyed. And yeah, I'll see you guys later. Say it one more time: like, comment, subscribe. Keep on investing. I don't know why you're waiting. And let's grow together. See y'all boys on the next one.